However, with all this being said, my first guess says it does pay to be a cautious bull. I want to bring in now stock market mentor Dan Fitzpatrick. So Dan, Wall Street and the financial media love to dismiss the so-called dumb money, but it seems like the geniuses sort of outsmarted themselves. And in my mind, there's some great lessons to be learned here, right?
Yeah, absolutely. The thing is, smart and dumb money, you kind of have to say, well, when are we talking about that? During strong market uptrends, the dumb money is actually pretty damn smart because that's the money that just keeps pushing the market higher, and that's still where we are now. However, as the market's gone up as high as it has, these institutions are saying, wait a minute, I don't think we're going to be rallying, and so they're pulling back. This is the exact inflection point where we are now, where the retail money, the dumb money, has been so damn smart for so damn long that institutions are finally doing what you're talking about doing. Shorts are covering and they're racing. I think the market ultimately goes higher, Charles, but I do feel like with sentiment, some of the things that you're just talking about, really, really low put-call ratio, really strong breadth. We're kind of due for a little bit of a breather here.
All right, so let's talk about the breadth part about this. There's so many ways to measure breadth, right? You can do advances, decliners, new highs, new lows, volume. One thing that we talked about a lot, the internals, participation. So it wasn't long ago, you had about 15% of the S&P 500 above their 50-day moving average. Only 15%. In fact, in May, which is less than 2 months ago, the number was under 30%. Now we're at 81%. I guess there's a point. I mean, is there a point where there's we have so much participation, the only way to go is down?
Pretty much. I think that's a good way to say it. It's like things can only get so good before they have to pull back a bit. And you really need to think about it this way. The whole reason why stocks do what they do is money moves in, money moves out, money moves over here, money moves over there. And so what we're seeing is with all these stocks up so high, so far, so fast, you look at how many are above their 40 or 50-day moving averages, the ebb and flow of stocks and of markets is really, really likely to just pull back a little bit. So you have to look at the strength that these high breadth numbers indicate, but then at the same time, you have to realize that nothing goes straight up. We're going to get this kind of move.
Sure. And listen, that's, I want to ask you about recession as a part of the investment thesis. Everyone brings up recession. Remember, coming into the year, recession was a slam dunk first half of the year. Now, half of the investors surveyed by J.P. Morgan say it's the first half of 2024. So let's just say that's right. Let's just say this is right. How do you invest differently from in a recessionary period versus a non-recessionary period?
Well, first of all, I think you kind of have to see the recessionary period, and we're not there yet. You know what I mean? I was in the recession camp. I really thought, God, the wheels are going to come off the wagon. We're going to be lucky if we make it through the first half of 2023. But I know this. The longer something is anticipated by the most number of people, the less likelihood there is of that actually happening. And so I would take the same approach with investing in a recessionary period as I would in a non-recessionary period. Go with the best stocks. Those companies that are bringing in the most revenue, okay, fine. But are they on a chart basis, on a price basis, are they outperforming their competitors? It's really not rocket science. Right. It's really just a function of looking in those areas that are still showing strong growth. And we're seeing a lot of those areas still.
Hey, Dan, I got to let you go, but just give us one example of that.
One that I like really is on Fitness, ONON. That stock is just starting to break out right now. I think that's going to do really well. One short squeeze is EXPI. That is going to do really well also. And so all of our crypto stocks that you and I talked about a month ago or so are just on fire. MicroStrategies, Marathon Digital. So we have a lot of choices that you can make right now to put your money, Charles.
Well, you've had the hot hand, and I appreciate you giving us a short squeeze. That's been a great theme. Talk to you again real soon, Dan.
Yeah, it has.
All right, buddy.
All right.
Hey, folks, coming up, my takeaway on the hunger cliff that it's crazy, but no one seems to care about it.